My name is Patrick Gallagher. I'm the founder of Exhale Lending, and this is part three of a three-part series on how buyers can take advantage of higher mortgage rates. In part one, we looked at borrower behavior and interest rates. Part two, we looked at the purchase. The real chestnut here is not just the purchase, but also the benefit you're going to get in the refi. And that's what I want to go over here, which I'm hoping you will find very, very interesting. If we would imagine ourselves 18 months from now and interest rates have come down, we could be in a position where we could be refinancing. So we're just going to make this assumption that it's 18 months from now. So here we are. Borrower one, if you remember, had purchased the property over asking because the rates were lower and the competition was higher. Buyer two had purchased the property below asking because the rates were higher and competition was lower. Okay, so this is what I want to explain. Buyer one, in the first 18 months of making payments, just principal and interest payments, and the original cash to close, has spent $56,949. Buyer number two has only spent $53,423. That's $3,526 less. So in spite of having a higher rate and a higher mortgage and a higher payment, when I say a higher mortgage payment, that borrower too is still better off to the tune of $3,500. So even if it was 24 months or potentially 36 months, buyer two would still be in a much better situation. Now, if you remember, buyer one purchased the property at 305, borrower two bought it at 295. That means if some future value, well, remember, we're talking about the same property. So that same property will have they'll have the same value in the future. That $310,000, that is the assumption here. Then from buyer one, the change of value is going to be 1.64% from the original purchase price. However, for buyer two, it's going to have increased by 5.08%. Okay, so that is very much extra growth, extra wealth. The other interesting thing is that future mortgage balance, which we can calculate, for borrower one is going to be still above 90%. However, for borrower two, it's going to be below 90%. Again, work with me here on these assumptions. What's happening in this scenario is that not only are we now refinancing into a lower mortgage rate, but we're also refinancing into a lower mortgage insurance as well because we're below that 90% threshold. And we have, because of that change in value, and we had a smaller purchase price for borrower two, we have actually we have additional forced savings of around about $8,927. So all in all, by staying with the intent of buying when other buyers are backing out, you arguably can acquire the home for less. You can get the seller to cover some of your closing costs. Something we didn't touch on is that you can also ask your seller to pay for something called a seller paid buy down. A seller paid buy down, says ask me about this, I'm going to tell you anyway. A seller paid buy down is where you are going to get the seller to put money into an escrow facility and buy your interest rate down by 1%. So just for the first year. So your interest rate in this scenario would have been 6.5% for the first year, even lower than borrower one or buyer one. You have greater upside when rates drop and home prices rise. You're going to have a double benefit to the refi. You're going to lower your rate and your mortgage insurance. And furthermore, when other buyers who have been waiting and sitting on the sideline are now in stressful bidding wars, they're going to be increasing the value of your home. And you're just sitting there waiting for the right opportunity to refi. You've got a greater potential for wealth development. And one little intangible thing here, which is absolutely worth mentioning, is that you are going to have far, far less stress. You can be under contract while the industry as a whole is going to be less busy. That means faster turn times in underwriting, easier accessibility to appraisers and inspections and so forth. It is worth reminding any repeat home buyers that during 2020, the turn times for an appraisal were up to 45 days. Borrowers were having to lock for 60 days. At Exhale Lending, we are getting borrowers clear to close on average in 7 business days. So it is absolutely worth noting that This is, not necessarily a financial benefit, but is absolutely a very much a benefit nonetheless. Uh, Here's some resources that were used in some of the earlier charts from part one. And again, here is my contact information. If you want to get more information, please email me at info at excellending.com. And if you want to if you want me to put together a pre-approval, please text exhale to 33655 and submit a loan application there, and I will get working for you. Really appreciate the opportunity to present here. Thank you so much, and hopefully we see you guys coming off the fence and being a little bit more aggressive in this market. Thanks again.